Now, let's have a look at Wall Street Journal, which is very much talking about your territory here, Alpesh. Dow tests heights beyond 16,000. This talks about the fact that during the trading session in the States yesterday, it went above 16,000. Kind of thing that traders and market geeks like yourself get really excited about.
I'm excited about it.
I am excited about it, yeah, but I'm kind of in that bracket as well.
I'm assuming you've all got BBC pensions. Your pensions will be invested in the stock market. Everybody who's got a stake in the market should be excited. What's interesting here is the market's up 22% year to date. Now, that's an extraordinarily large rise for the US market, but it's also a global rise. It's not just the US. In the UK, we're near all-time highs. In India, and we at Profinium have announced the launch of our latest India fund just on Friday.
You're getting that in, are you?
We have timed it perfectly because the Indian markets are at all-time highs as well.
But some would argue you haven't timed it perfectly because actually, when this sort of thing happens, a big fall is just around the corner. And many are arguing that when you look at actually the valuations of the companies listed on the Dow Jones and what have you, the share prices are just getting a little bit ahead of themselves.
You've been raised to absolutely very important points. When you see things like this is when you realise the importance of skilled managers, because as you say, picking investments is going to be more important because in a rising tide, of course, anybody can make money. And so as you rightly point out, when we start seeing some of these dips, and that's why we've got to caution private investors to say, just because you're seeing an all-time high, it's private investors who often come in too late to the party. They're the last ones at the party. And we've got to caution them and say it doesn't mean that you should be buying lock, stock and barrel into the market. Do be cautious when it gets to these kinds of levels for the valuation reasons you rightly mentioned, that it often means that it's going to now hit a phase where it's more important to pick the right stock rather than just assume you can throw money at anything.
Very briefly, the minute the Fed does start to withdraw its stimulus, do you think we'll see a shift on the market? I
think it'll be a very good excuse for many of us to take profits and use it as a reason to push the market lower. And I would not be surprised if the market fell 15, 20% as a result of when that easing.
And when you say the market, which
US markets, and actually they're all highly correlated. So the reason I pointed out that it's a global rise is when connecting India to the UK, to Europe, to the US, is they're all pretty much at all-time highs. And so it would end up being a global phenomenon. Sadly, markets become very correlated on the when you need diversification the most, which is when markets are falling. Unfortunately, they all tend to fall lockstep.